I often say on X, few understand this. And one of the guys who is among the few is Mr. Gareth Soloway, who's our guest for the hour. For those that are watching live, give me a second. Let me make sure that we're streaming on all the various platforms. It looks like we are. We're going to be talking about how to think about markets, trading through the election. I just noticed there's a typo in the title. I said tating for the election, which I don't know what tating is, but maybe we'll figure it out by the end of the show. For those that want to engage live during this conversation, we can see your posts, whether you're on X, YouTube, LinkedIn, which means if you want to engage, ask on whatever platform you're watching. Let's make this interactive. I'll be able to show it. We'll go back and forth here. I am excited for this conversation. I'm excited to get Gareth in front of my friend, Mr. Will Rhind, the founder of GraniteShares. So with all that said, my name is Michael Guyett, and welcome to the High Conviction Podcast by GraniteShares. Our guest for the Rough Hour is Mr. Gareth Soloway, and of course, my co-host is my friend, the founder of GraniteShares, Will Rhind. Will.
Thank you, and good afternoon, everybody. Will Rhind, founder and CEO of GraniteShares. We're an ETF issuer, for those that don't know, manage just over $9 billion amongst various different ETF strategies here in the US and across Europe as well. Probably most known for leveraged single stock ETFs on popular names such as Nvidia, Tesla, etc., but a host of other strategies as well.
And of course, Mr. Gareth Soloway, who knows a little bit about trading single stock funds, apparently. Go ahead, Gareth.
Gareth Soloway here, and it's a pleasure, and thank you both for having me on. It's going to be an exciting conversation, I'm sure. And yes, I can't tell you, I run a day trading room, and man, every time we trade Nvidia, there's always a good chunk of people trading NVDL or NVDS or one of these GraniteShares ETFs. So it's really cool to see that it's giving people alternatives. The best feedback I get about it is that a lot of these stocks are priced very, very high, $500, $1,000. I mean, we know Nvidia did a split, so they feel much more comfortable trading something that's in the $20, $30, $40 range. And so that's great. I run verified investing, which my goal for verified investing is to kind of bridge the gap between institutional knowledge and retail knowledge, helping people understand how if you look at the charts, you avoid the FOMO, the fear, the FUD, whatever they call it, and can actually figure out probabilities. What's the probable move here? And really, when you're a trader or investor, that's what you're playing. You basically want to be the casino, not the gambler. And yeah, you'll have losses. I certainly have my fair share, but over time, you can make good, solid decisions based on probability, not emotion.
Amazing. So look, we've got a few things we want to talk about this afternoon, but maybe just from the top, Gareth, what are the things that you're kind of most concerned about, or what are things most on your radar at the moment?
Yeah, I think there's a lot of macro issues. I think Michael's in the same boat as me, that we see a lot of things that are, you'd kind of say it's the storm clouds on the horizon. But looking at the horizon, it's very, very hard to tell when those storm clouds will arrive. It's coming. You don't know if it's this year, next year, or next decade. But when it comes, it's going to be very, very scary for a lot of people. And so my goal is to kind of just talk about it so that investors at least understand that it's a possibility. And one of my jobs as a trader is to analyze risk, right? It's always great to look at how much money you're going to make if things go right. But the real traders look at how much they're going to lose and figure out, does that make sense? And so with that comes a lot of this macro data, where even if it doesn't happen this year or next year, we need to be prepared and be ready for it so we're not caught essentially off guard. And so, macro data, for instance, I like to look at things based on history. So for instance, one example of that would be the yield curve. Well, everyone, when the yield curve inverted, freaked out. But we know if you look at history, it's not until it uninverts. And not only uninverts, but there's generally a 3 to 6 month lag before you get into a recession. So again, watching things like the JOLTS data yesterday, which came in light, ADP private sector came in strong today. So those kind of cancel each other out. But then watching the jobs data on Friday will be really, really important. Also watching things like, you have to watch the elections. The elections aren't just, it's become a global fear for many investors where, if one candidate wins, there could be less, there could be major higher tariffs, which a lot of people champion as like, oh yeah, this is great because it'll bring more manufacturing to the US. But what they're not understanding is that the prices of these goods are going to have to go up, which has been a major issue for so many people. And I think that's another thing to bring up is that, we've seen such a divergence in political views in terms of wealth disparity. It's becoming really bad in terms of seeing so many people being left out of the wealth effect because the stock market's been going up. So those people invested have done very well. They can manage, but you really have a two-class system now. You have people that didn't have investments and they've been crushed by inflation. And then the other side is people that have done very, very well. So there's just a lot of concerns out there. And I'm not even mentioning, Russia, which is cozying up to China, which now has, North Korean troops fighting in Ukraine. I mean, there's definitely the seedlings of potentially World War III. And I hate using that term because I don't want people to think like, oh my goodness, it's another type of scenario like that. But it is what it is. It's might be fought in an economic manner. It might be fought with robots and drones, but there is something on the horizon there that we have to be aware of.
Do you think that gold's move is because of that war concern? I mean, with the spikes in gold this year have coincided with these tit-for-tat attacks between Israel and Iran.
Right.
I wonder how much of the gold move is some kind of hedge against that, we hope, very low probability that never comes to fruition of real serious global conflict.
Yeah, so there's no doubt it's partially that, right? I think it's partially the global instability. I think it's also the elections. I think gold has actually been very overbought in the near term on a technical basis for the last 3-4 weeks. And it has these like one-day pullbacks and then it makes new highs. Very unusual, but I think what it's happening is people are so nervous about the election that they're really just buying every little downtick in gold. And my thesis is that we'll get a bigger pullback after the elections, assuming it's not catastrophic. And then ultimately you'll still see it go higher because I think even beyond the global instability, there's been more and more focus on the U.S. debt and the fact that neither candidate is going to even come close to cutting back spending. If anything, spending is going to go up. And so you look at 4 years out, right? Let's just pan this out, whether it's Trump or whether it's Harris. The U.S. national debt could be 60 trillion in 4 years. I mean, that would not be outlandish based on the trajectory we're on. And at some point that's unsustainable. I mean, we all run our own households. We all have to manage our own credit cards and our own debt and everything like that. And what we know is, we're not as powerful as the US individually, but at some point the creditors cut you off, right? And at some point they demand a much higher interest rate. So, everyone's talking about maybe deflation. That's always a possibility, but it's very hard to imagine if the debt keeps going up that deflation can really be in play because at some point rates are going to, rates have to go up at some point with these other countries.
Yeah, I saw some funny meme that was went along the lines of, the winner of the presidential election's already been declared and it was a bar of gold. And so either way, like you said, that we know that the debt's going to go up and therefore, gold prices are acting accordingly. Yes. And I think that's so true. And what I find fascinating, and this is something that's just kind of, been on my radar for the last month, is the performance in oil. And I mean, we could chalk it up to, OPEC is going to put more oil there, but I don't buy that. I think, here you have China supposedly stimulating massively. Oil can't get out of its own way. The US supposedly is not going to have any sort of recession and everything's clear sailing, but oil is basically at 52-week lows here. And even silver, I mean, silver's had a run, but it's not performing like you would expect it. Look at nickel, look at copper. These are way, way down. And these are signals that I look for. I call them breadcrumbs because they're kind of leading you to a conclusion. But they certainly are things that for me are, again, more warning signs of something that's lurking out there. So Gareth, are you thinking about anything specific for next week, or is it an event you like to trade? Is it something you just stay away from, let the dust settle? And how do you think about specifically the election next week?
Yeah. So I mean, between this week with all these $1 trillion companies reporting earnings and then the jobs data on Friday, and then you go to next Tuesday, the elections, next Wednesday, the Federal Reserve, like I'm ready to be exhausted and need a break after it, but I'm excited to trade it because, a trader, and again, we're talking more shorter term, I play off of the emotion of others. When people get too emotional, they make bad decisions like jumping in at highs or selling at lows. And when I see that, I can kind of utilize that to my advantage to go the opposite way at these key pivot points based on the chart. And so I am really excited for it, and I plan to trade it accordingly, but I'll also trade it very carefully, right? I mean, very, very carefully. The more volatility, the smaller the share size position has to be.
Do you have a view on this phenomenon that we're seeing at the moment, where if you're looking at certainly betting markets, the betting markets are very clearly gone in favor of Trump.
They
But
have.
yet the polls are seemingly neck and neck, so depending on which one you kind of prefer.
Yes. So,
have a view on that?
and that's a great question because you also have DJT, right? DJT has gone up
As part of
insane. It was
the
like
so-called betting market.
$13 a month ago, and it just hit
Yeah.
50s and change. I think it's pulling back today. But you assume that, I mean, literally, there's no business model there. They have zero revenue, so it's really a proxy for what people are hoping will happen. But yeah, then you have the polls, which are showing neck and neck. And honestly, in this situation, I just don't know what to believe, because we've seen the polls be wrong in the past.
Yeah.
Mainly because people were afraid to say they were going to vote for Trump because it was very unpopular. I almost feel it swung the other way, where people are almost proud to say they vote for Trump. They're going to vote for Trump because there's so many. But then also other people that might be voting for Harris are a little nervous to say that. They don't want to get like someone yelling at them because they're saying they're going to, so to be honest, I don't know. I wish I did. I'd play the betting markets if I felt I had an edge, but I definitely don't.
Yeah, the odds seem very high. I saw there was start to come down today, so become more more reasonable. But certainly was very, very high odds.
And there was I heard there was someone in France that put like 30 million into one of these bets, which then obviously the liquidity isn't so massive, so that really swayed it quite a bit. But I mean, some crazy stuff going on out there. I mean, and by the way, now you can do this on Robinhood. You can bet on political outcomes and even IBKR. I mean, it's really, I mean, if they can make a buck doing it, these brokers are going to do it, I think.
Can we expand on that? Can we expand on that? Because I think it's so fascinating. I was I'm going to assume that person in France wasn't Benoit, by the way, Will, because he's here. But I'm blown away at like how much of a mentality there is out there to just bet on anything and everything that you can, right?
Yeah.
And in size, and even on the very small things that would normally you would think are kind of weird to bet on. You think, has that changed markets at all? Has it changed the way that people trade, the way that prices move, this sort of culture of let's gamble?
Yes, and I think you're bringing up something amazingly important, Michael. Is that since COVID and since you got in a lot of these younger investors who have been conditioned because the Federal Reserve has essentially bailed us out, and government spending has been part of that. Just this continual massive amount of spending has kind of kept everything afloat. But even during COVID and the COVID collapse, things dropped 30% in a month, and we were back at all-time highs a couple months later. And so there's this conditioning that you can't lose, that there's no losing, just keep pumping your money in. And I think that's that gambler's mentality of like, listen, you're riding on a hot streak. You just go all in on everything because you're just riding that hot streak. And the idea being is that, hey, listen, if the markets really get in trouble, the Fed can bail us out. And I just like to point this out to people is that the Fed cut 50 basis points 6 weeks ago now, and yields did nothing but go straight up. What does that tell us? It tells us that the Federal Reserve, at the end game, they do not have control of interest rates. Yes, they can. If things are normal, things are calm, then what they do will impact it. But the ultimate outcome is determined by other forces, market forces. And that should, honestly, if people understood that, they'd be much more scared about doing these things, because it tells you that the Fed can't always bail us out.
I think another aspect to it is the like the gamification side of it, where with technology, it's become a lot more normalized. Remember the days when betting was sort of seen as quite it's certainly not mainstream, but in the UK especially, you'd have shops that people would go, and stores that people would go to bet, and they were very like depressing places. And it was really sort of a fringe thing. And now I think it's become much more normalized. Like people put money on, whether it's sports or whatever it may be, and it seems sort of quite normalized. A lot of that I think is the gamification side.
And I think these big names like Robinhood and these other things are playing into that, right? I mean, they understand what's addicting, and they're creating these apps that do that. Like when you get a winning trade, it dings and makes you feel great. You get that instant gratification of the ding sound or whatever it may be. Maybe there's an image that pops up that shows like money flying out of a cannon or whatever it is. But you're 100% right. It's playing into that need. And I also think in a weird way, it's like, you have a lot of younger people coming into a society where there is this divergence of rich and poor more and more. And there's this feeling that the only way I can get rich is by playing the lottery, AKA by going all in on this crypto and hoping it does 100 or 1000x. Yeah. And so they're willing to take those risks because they don't think that they can do it otherwise. And that's also a very sad thing.
Yeah, and the crypto is a good example of the phenomenon of people just trading, accessing cryptocurrencies of all different. I was thinking also the NYC recently made an announcement that they're trying to get go to 22 hours a day trading. I don't know if you saw that, but that's another interesting development where we seem to be moving more towards this idea of 24 hours a day, 7 days a week, instead of the structure that we have, which has been in place for a long time.
Yeah, and in fact, I have IBKR as one of my brokers, and they allow that overnight trading already, where you can trade. So you can trade from 4 in the morning to 8 o'clock at night. That's pre-market to the end of pre-market, and then at 8:01 you can do the overnight, which goes to 3:59 or something. I mean, basically, it's 24 hours a day trading at this point, which is probably being driven by crypto, right? Crypto 24/7, 365. But it's also a way to generate more fees. The thing I will just caution investors on, so the way I've been using this is that the overnight occasionally, so let's say you have a stock that's up significantly during the day on good news, overnight, the smaller investors will bid it up incredibly. And so I use that to go actually short, knowing that once you get the liquidity back in the market, it will come back in, and vice versa. Things can get pounded down far. So people just have to be very careful when there's less volume, as we all know. The moves can be much more accentuated, and I can take advantage of that knowing what I know, but I do also know there's a lot of smaller investors that can get burned that way.
Maybe let's talk about the Fed for a second, because I feel like we've forgotten a little bit of action, but we started the interest rate sort of cutting cycle, and now we've got different people speculating on what will happen between now and the end of the year. What's your view, Gareth, in terms of where we go with interest rates for the remainder of this year?
Yeah, so I think the Fed, and I'm also looking at the Fed Watch tool to kind of guide me, but it does look like the Fed will cut a couple more times, but at this point, just 25 basis points. I'm still scratching my head over the 50 basis point cut, because when they did that, and I'll admit, apparently I was wrong on this, but I said, wow, they must know something that I don't know about the economy to be cutting 50 basis points, because that's a big cut. Historically, that's like an emergency cut almost. And as we saw from the economic data that followed, there was really no major fear in there that should have caused them to do that. But I do think you probably get another 50 basis points by year end. The big question is when does that slowdown occur in the economy? Or maybe they do see something, it's just further out. But again, it's hard to believe that with things going the way they are. Now, listen, if we were at 2% inflation or 1.5, totally get it, right? But we're just a little bit below 3, which again, I mean, are they not concerned they could kickstart inflation again to the upside by cutting when we don't need it? And these are questions that you guys can answer too. I mean, it's a very interesting scenario with the Fed, but I'd be in looking for 25 basis points next week, and probably one more in December.
Yeah, it is.
I still think it was Japan, man. I still think it was Japan personally. I think they got freaked out, and they wanted to. I think there was some element of like, all right, well, what if that comes back?
Yeah. Well, yields came down obviously, and then completely backed up again. So whether that's just a function of what's they're predicting for next week for the election, or whether it's a little bit more longer term than that, but certainly all of those interest rate gains that we saw after the cut are gone.
Yeah, do you guys mind if I share my screen? I want to show you guys something here. So this is the 10-year yield, and this is in technical analysis is one of the most beautiful setups that you can ever have. Is you have this what's called a wedge pattern here, where you can see you can connect the highs, you connect the lows, and this goes back to 2023. And you can see here on the 10-year yield, it broke And when things break, a lot of people jump on board and try to chase. What I do is I let it settle. And then what I do is I play what's called the retrace to the scene of the crime, which is where price just naturally wants to go back and retest that zone. And what we could see is just yesterday we did that. I actually bought the TLT with members of mine here because it basically goes inverse to yields, thinking that at this point yields are probably nearing a top out point or at a top out using this technical resistance level. And so my thinking is that yields will actually start to come back in. My also thought process, it's not so much about the Fed cutting, but I think that we will start to see that weaker economic data. So I just wanted to point that out. I thought interesting in terms of yields hitting resistance here. We might see a turn down now.
Yeah, I think you could be right. With some bad news for some of the home builders, and then mortgage rates like briefly went above 7% again. So it was all these sort of bad signs that financial conditions were tightening again in all the wrong places.
Yeah, absolutely.
So we'll see.
Got some questions from YouTube. Let's go to Sergio here. What is Gareth's outlook for nat gas with the cold season soon approaching? By the way, apparently markets are not efficient because even though people know things are out there, apparently price does not reflect it.
Yeah, it's true. So natural gas is one of the hardest things to predict. They call it the widowmaker for a reason. So I'll preempt this with that. For me, there was a couple trades here that I had taken on the chart. If we can, I don't know if you guys can pop up the chart, but what we do see here is that natural gas had kind of come up to resistance. It got pushed back down, and now it's kind of stuck inside of this little wedge pattern here, if we will. I'm leaning towards expecting it to break lower towards this zone here around this 235 area. But just to be honest, I wish I had a better read. I don't have a high probability set up for a trade at this point.
Yeah, I mean, there's really not enough juice there, right? Anyway, it's like you want some volatility as a trader.
That's what you want. You like the big moves that we saw earlier in the year. Those were the moves that you could trade off of. Those are the ones I did. As it kind of tightens up, you have to wait to see, does it break out or does it break down before you start thinking about a trade? Absolutely.
Another good question here. What are the trades he would make? He being the lowercase he, Gareth, not the upper. If it's uppercase, it's I mean, I would like to know what God would trade to. It would make if Trump is elected, and the same for Harris is elected. Actually, so this is an interesting question though, because if we go with the idea that the stock market is pricing in a Trump win, let's do a thought experiment. What happens if the stock market gets surprised and it's a Harris win? I mean, it's the opposite of what happened last time around, right? With Hillary and Trump.
Right. Yeah, that was an incredible rally from, no one thought Trump had a chance. And I just remember the markets. The futures initially were down massively in the overnight when Trump was taking the lead. And then the turnaround just started one of the biggest bull runs that we've seen in a long, long time. So the big question is, right, so my thinking is, number one, if Trump gets elected, you probably see a sell the news event, or at least a pause, right? So a lot of this has gone up into that. So it makes sense that, a lot of those gains are already factored in. The bigger question, what would be, is if Harris wins, which maybe isn't in the market, what would benefit it? And I think for me, I'd be looking at solar stocks. They've been beaten down. So alternate energy sources, stuff like that would probably be where I would go. Maybe with like something like a Plug Power, a First Solar. Plug Power obviously is battery backups and stuff like that. But I think that's an interesting play there, because a lot of these, in fact, let me bring up this chart. This is one of my favorites right now, Solar Edge, just because of the chart. It has you can see here, it's been incredible downtrend, but little things that I watch for this little breakout right here. And again, you can always keep a stop right under this area just in case, or you can keep it at the lows. But when it peaks above these levels, sometimes these get really explosive moves to the upside. So, just some ideas there.
We got a lot of questions, Will. Should I keep going here?
Yeah. Well, maybe one of them we can move to a different topic.
Yeah, I mean I like the Tesla one is interesting here. Actually, that's a good one also, Will, for you to add some thoughts. Given that Elon Musk endorses Trump, how will this affect Tesla before and after the election? Now, it's supposed to be the case that it's about fundamentals and earnings. But as we know, that's not always the case. You think there's a sentiment play there?
Yes. Yeah. I mean, there's no doubt about it. Is that my guess is there's a percentage built into the Tesla stock based on a Trump victory that if he doesn't win, you might see a 5% drop, maybe even more. But I do think overall, so much of this also has to do. Number one, their earnings were actually pretty good. That surprised me. I didn't realize they were going to be as good as they were. Number two is it's all about like there's so much focus on this robo taxi, auto driving type stuff that there'll be a premium in the stock based on that. And I think either way, Elon Musk, love him or hate him, he's smart. He's a smart guy, and there's a premium in the stock based on that as well. So if Trump doesn't win, I would expect a small pullback, but ultimately it's going to go back to robo taxis and what their current numbers are.
The sell the news.
Yeah.
No, I think that's right.
I think that's a fair one too. Absolutely. Yep. Just run up into that, sell into it.
But it could benefit again with the deregulation aspect.
Mm-hmm.
Clearly pitched his wagon very firmly to Trump, and as obviously a big beneficiary of government money anyway through SpaceX and all the other contracting. I mean, it could be good for Elon Musk Inc. Right?
And even for, I'm just thinking of this too.
That's part of that, yeah.
The tariffs, right? The tariffs, if they throw these massive tariffs on all cars coming in, it certainly makes a Tesla look cheaper.
Yeah. He's a smart guy, like you said.
Yeah, he is. He is.
You said sell the news type of event. You didn't say short the news or inverse the news. So what makes you go from sell the news to actually bet on a decline?
Yeah, at least for me, because I don't have so sell the news seems the logical aspect, but oftentimes you'll get the emotional reaction. Like let's say Trump does win, the emotional reaction is going to be to bid up the stock in pre-market, and maybe even initially at the open, in which case, the idea being is he's really going to be cozy with the president. He might even have a position in the presidency, right? Yeah. So I would want to wait till after it, and then I might short that day though. If it gaps up 5 or 10%, that might be then the short to take. But I'm not gutsy enough to pull the trigger ahead of it.
Do you play with the inverse ETF side of things? When you were thinking about making a directional bet, are you doing outright shorting? How much do you play with them, if you do at all?
Yeah, so I do the ETFs. Definitely do. I've traded NVDL before. In fact, sometimes and this is interesting. Sometimes I'll be short Tesla, or I should say Nvidia, and then I want to also let's say you're swing short on Nvidia, but you want to go long for a day trade. So you don't want to mess with your core position that's short Nvidia. So you can play these ETFs and actually so you'll make some money by going long, but at the same time, you're still net short in your portfolio. So definitely do stuff like that. And then usually for trading, like swing trading, I'll use 2x. I don't mess really with the triples because they lose so much value over time so quickly. But because the S&P, like a big move on the S&P would be 5%. As a swing trade, unless I'm putting a crap ton of money in it, that's not going to really move the needle for me. I want to try to make at least 10%. And so a double ETF on like the S&P short or long is usually more my style in that situation.
Given we're in the middle of earnings, Gareth, is there anything you're particularly looking for? Any stocks you're particularly following here, given that we're sort of right in the middle of tech earnings season?
Yeah. In fact, I mean, some remarkable moves. And let me just show my chart again, if you guys don't mind. Yeah. I do want to show this pattern here. Google or Alphabet, this is one of those great setups. And I talked about this before earnings came out. But what we can see here, this is what we call basically an inverse head and shoulders pattern going into earnings, or you could say a cup and handle pattern. But it was really guiding us to saying, okay, Google should have good results. It has actually faded quite a bit from the open, but things like that definitely to paying attention to. And then today we have Microsoft reporting after the bell. It is up. The one thing that kind of scares me about this is you could see these parallel lines. So it was stuck in this parallel. Then it broke down, touched this parallel, bounced, touched this parallel. Notice how this is resistance here, this upper level. So in terms of resistance, there's this first level. But really, if you were to rally on Microsoft earnings, your upside maximum, I would say, would be a back to this trend line resistance at 458. And then if it were to break down from this one, you have significant downside. But Microsoft's been lagging. the other thing to keep in mind too is there's a bigger head and shoulders pattern on a lot of these charts, which is a macro bear call on some of these. And then I will say I am short Meta going into earnings today. Maybe I'll get smoked, but I can't say no to shorting something that is this vertical on the weekly time frame. And again, it's up today on the back of Google. One of my favorite things is when a sister company that does advertising, and that's why Meta's up today, reports good earnings, then the stock like Meta goes up on that news, meaning that they have to perform equal to as good as Google just to maintain that gain. And so it starts to sway the probabilities that a short trade might work out, or at least if it does go up, there's a limited amounts of upside on these type of trades. And so names like this, I thought the AMD earnings were just nasty. I mean, really nasty fall on this, down about 9, almost 10%. But again, we haven't seen any corroboration yet from something like NVIDIA that there's a slowdown in the AI trade just yet. And AMD has a lot of other chips sides to it versus just the AI. So it'll be watching. I think KLAC reports tonight. That's another chip stock as well. That'll be interesting, although it's a much smaller one. But yeah, it's been fun. I mean, earnings season is always my favorite because you get these crazy moves. And for me as a trader, a shorter term trader, that's where the money can be made.
Do you, there was actually a question, we just talked a little bit about AMD, but there was a good question earlier, Michael, let me pull it up regarding AMD and SMCI. And obviously, given
let me grab that one.
It's in the news today because the auditor resigned. The stock the last time I looked was down like 30% or something. It's an interesting one, Gareth. Do you get involved in events like that? Is that the kind of the something you look for, or you stay away?
So yeah, there's no doubt. Yeah, for trading purposes, like today, definitely all about trading SMCI when there's an opportunity. I think one of the key things to just note on this chart, and these are just, I love showing charts because they give you these insights, right? And this was a beautiful trend line on SMCI here, where you can connect the lows from 2023 here. And it actually extended out right here. And if you look, price got below that line and then it couldn't get back above. It kept trying and trying. And essentially what this is, it creates what we call a bear flag in technical analysis. So you have the down move, the inside bar action, sideways action. And that's telling you price still wants to go lower. And then lo and behold, we get the news today and SMCI is trading down 34% on the day. Now, having said that, number one, the auditor resigning is not a good thing. I mean, we know there was already allegations about this, but the key is there a level to trade? And there's always a level to trade, right? And I don't know what's going to come of this auditor resignation, but you start to look at baseline areas right here, even extending this out. And for me, if this were to continue to sell in the coming weeks, I would start to nibble, looks like right down here around this 23.75 to 24 level. Still a long way away, but I certainly will be more careful. And that's why it's so far away, is because, I remember Enron. I know a lot of younger investors don't remember that. WorldCom, you just don't know. You just don't know. And you want to be a little bit more careful.
Yeah, an auditor resigning is a little bit of more of a serious situation than, say, for example, another one that was in the news recently was McDonald's. And you had the E. coli breakout, stock sold off, and then it felt like almost next minute they're releasing Q3 earnings and it's a beat. And now they're saying, that the E. coli is behind them. So there are these kind of events where the stock drops because of bad news, and it's typically a good opportunity. Absent of everything else going on.
Yeah, and I think for me, like we did a couple day trades on this today. Day trades where you're in and out so quickly, you're not really exposing yourself to overnight. I always tell investors, if you're a long-term investor, the markets generally go up over time, and so you can sleep at night. When you're a swing trader where you're holding for weeks or months, the negative of holding that period is that if something happens like in China overnight and the markets get crushed, you're exposing yourself. Even though day trading is so hard to do, the positive is you're in and out that same day and you sleep like a baby at night because you're in cash, right? So it's just the differences of these type of trading methods.
Go back to AMD for a second. What was your sense of the earnings? It felt to me it was almost a little bit like NVIDIA's Q2, where they obviously beat, but it just wasn't quite what the market was expecting. What did you think about AMD's?
Yeah, and I think in this market environment, if a stock does not, or a company does not at least even exceed their earnings, they get punished. And we've been seeing that more and more with some of these names. I mean, even today, I mean, First Solar's getting hit today. I mean, DHI, DR Horton got hit yesterday. Some of these earnings aren't horrendous, but they're not good. And I mean, that brings up Eli Lilly. I mean, Eli Lilly getting crushed today after missing their earnings. So to me, it's not so much the company specific that I'm focusing on. That was not quite up to par, but not horrible, but just again, enough to make investors say, would I rather be in AMD or NVIDIA, right? Or in some of these other names.
Yeah.
But it's more, does it give us any insight into something bigger coming for NVIDIA? Because I'm still a big believer that NVIDIA will see a 75% drawdown at some point in the next year or two. And the reason I say that is because every stock craze, and Michael, you know this, is that you look at Tesla in 2021, it had a 75% drop from those highs when it was just the hottest stock. Everyone FOMO'd in. You look at the solar stocks, and I think it was 2008 when they got crazy. First Solar went to $300. It then went to like $12. You go to Cisco Systems in 1999, 2000, went down 80%. Is that it was just this history of this happening, and investors will always tell you this time is different because these AI chips are different, or back then it was the backbone of the internet was different. But human psychology is really what we're trading. When we're trading stocks, we're not trading like that stock or this stock. It's literally other humans and their feelings on a stock. And so greed is greed and fear is fear. If you go back to ancient Egypt or Rome, I guarantee you, I mean, it was a different market then, but there were greed and fear, the tulip mania, right? All these type of things. And so I do think we're looking for that first sign that the AI phase is kind of slowing a little bit. And then that will be a massive exodus. And you guys know, money has gone into these names in more mass than at any other point in our history here. It is just overloaded. And the worry is that when everyone runs for the exit, what happens?
Yeah. And how, in your opinion, what are the signs that that's there? Because you've got a little bit of that maybe in AMD's earnings, but to me, it was much more about this is a company that still has more demand than they have supply. Right. There's supply chain issues that may affect the shorter term, ability to meet expectations and margins for next quarter. But it's not, to me, saying that the AI boom is slowing down. It's more just the expectation around next quarter's earnings and the delivery.
Right.
When do you think you start to see something a bit more like what would be that trigger point to you, or is that okay, this is a bit more serious?
So a couple different things there. I think number one is you watch for the demand side to slow down. Maybe companies at some point are saying, hey, we've bought all these chips, like Meta's bought billions and billions of these chips. Are they really able to monetize it, right? Are they able to say, okay, well, we bought 10,000 of these chips. Now, how the heck do we make money off of this? We spent this much money. And I think a lot of companies, it was this kind of greed fear where they're like, all right, we have to buy as much as we can because we hear this is going to be the next big thing. Okay, now we have them. How do we deploy them and make money off of this? And I think people will figure it out, but it might be companies just take a little time and they just have to say, all right, we have to take a step back. It also could be something like, the consumer slowing down, so they're bringing in less revenue and they say, all right, well, we don't want to keep spending at the levels we're spending if the consumer is slowing down. And then lastly, I would just say more than anything for these stocks, I think it's margins, right? So NVIDIA's margins are what, 70, 75%. Anytime margins are that high, what does every other company want to do? They want to create the exact same thing, which eventually means a glut of chips. Now, NVIDIA is still top dog. There's no doubt about it, but there will be more and more competition. In fact, I would argue this is what we saw with Eli Lilly today. Eli Lilly reports earnings. They missed on revenue. They missed on earnings. Because everyone else out there is now starting to try to make weight loss drugs because it's so popular and there's money to be made and the margins are big. Eventually that will happen to NVIDIA. I think the technology is just more advanced, so it's going to take a little bit more time.
I shared on the screen an interesting point from Dunning-Kruger, and one of these chips needs to be replaced every 2 to 3 years in order to support the new compute infrastructure. So the idea that demand is just going to keep on rolling and rolling and rolling. There's no such thing as a glut because there's going to be another generation and everybody needs more.
Yeah, so I think as long as as long as companies have tons of money to spend, then you're probably right about that. But I still think competition will drive those margins down. And I think that means that an NVIDIA being priced at where it is would still come down in value. Even if demand stays the same, if margins go from 70% to 30%, you have to reevaluate the stock price of NVIDIA.
I love all these questions. Those that are watching on YouTube appreciate those that are putting these out there.
You got Bitcoin, you got everything.
Bitcoin. Let's talk about Bitcoin.
What crypto?
Yeah, let's do some crypto. Is Bitcoin a risk asset? Will be a form of currency going forward. When I can pay my taxes in Bitcoin, then I will consider it a form of currency. Newsflash: I don't think you're ever going to pay your taxes in Bitcoin, but I know you're going to keep paying taxes because if you don't, we're all in trouble. Any thoughts on Bitcoin here, and then maybe in particular Coinbase? I think Coinbase gets to be an interesting stock to talk about. I would think that under a Trump administration, it's probably more beneficial to a Coinbase than to the actual underlying cryptocurrency.
Good point. Yeah, I think you're right about that. So I think
could you be paying your taxes with Bitcoin under a Trump presidency?
Yeah.
Maybe. Who knows? I think it's all a big gray area when it comes to that. But so number one, Bitcoin is just tested yesterday its all-time high, right? So just naturally you're going to get a check back. I still think there's probably a little bit more upside. So the way charts work, right, oftentimes is you go test a high. There's a lot of sellers that front run that high and they want to just be like, make sure that they take profits, they get out of it. So it drives price down. And then usually what happens is it wants to go back up and pierce that high. It wants to pierce that high because there's a ton of stops that are put right above that high, right? So you want to run those stops, which gets out the bears. And then when it breaks the high, guess what? Anyone that's on the sidelines and sees it break the high is going to rush in and they're going to say, oh man, I got it. It's breaking out. It's going to, you'll see all across all the social medias, platforms and everything like that. Bitcoin breaks all-time high. It's going to 100,000. You'll see the $1 million number thrown out there and all these crazy things, right? In general, I think there is some upside here, but I would be very cautious only based on the stock market. The stock market, it is very clear. And it has been more correlated to the stock market recently than even in the last 5 years or so, that when the stock market sells off, Bitcoin tends to sell off. And I continue to be very concerned about the stock market, even though my S&P target's like 6,000, 6,100. By the way, that's only at 3% away, 4% away. But at some point, we are going to get some sort of bigger fall in this market. And I do think that investors in Bitcoin should be very careful. And I would just recall, let's make sure we remember what happened in 2021 when Bitcoin did take out its previous high here, 65,000, and then it went to 69. And then anyone that bought above 65 to 69, thinking it was this great breakout to 100K, they got absolutely crushed on that move to the downside. So suffice it to say, I do like Bitcoin as an asset. I do think it's a risk asset right now. I do think in 20 years, we might be talking about it differently. But I always remind people that Bitcoin was essentially debuted in 2009 as 2024. It's a 15-year-old. So does your 15-year-old, anyone who has a 15-year-old, do they act rationally? Are they a stable player like gold? No. I mean, like, they're going to be wild. They're going to be whippy. It's not the digital gold yet, but I do think eventually it can rotate into that. It's just going to take time. It's got to mature.
I want to make a joke about digital puberty, but I don't know if I can. That's one way to frame it. Well, I like that analogy. That was pretty good. And then Coinbase. Let's touch on Coinbase here.
Yeah.
Coinbase. Let's take a look here. By the way, I'll show you something on MicroStrategy too, because I shorted MicroStrategy yesterday. That's pretty remarkable here. So in terms of Coinbase, this looks like it might be able to challenge the highs here. The one thing I would just be careful of, you have a very clear pivot high to pivot high. So if it did rally to 260, 262, that would be resistance. But overall, it's not a bad chart. On the upside, you would just not want to see it. So basically, you don't want to see it break below 162. And again, the resistance will be 262, we'll call it. So there's 100. I mean, it's a big range. But then again, the stock moves in that volatile range. But I agree on it. Under Trump, you would assume less regulation, more acceptance, et cetera. This would do very well. On the other side, you probably get a harsher, Securities Exchange Commission under Harris, I would assume. Lastly, let me just show you guys this because this is a cool chart. Look at this amazing parallel. Parallel channels are one of my favorite trades to take. They are so powerful. When you have a parallel that lines up with all the lows and it then price hits that high, these are one of the best shortable opportunities you can get. And what I love about this too is that the stock MicroStrategies is up like 100+% since September, but Bitcoin is only up, what, 20%? So it's outperformed by a mile, which means there's a lot of potential downside to come back in alignment. Because again, if you look at MicroStrategies, their business, it's worth a couple $2 billion. The Bitcoin they're holding, I think, is, I don't know, 10, 15 billion. I'm not sure what it is, but it certainly isn't the $55 billion market cap that it has. And so those are the types of disparities where emotion drives investors to buy in because they just love Michael Saylor. Like if you're a hodler in Bitcoin, he's your god, basically. But that also gives me the advantage as a trader to know that things get out of whack, and I can ultimately use that to my advantage to make money.
Yeah, and the implied volatility on the options through a lot of these stocks, but specifically MicroStrategy and Coinbase, has gone up pretty dramatically, even just in the last month or so. So the cost to own these stocks, it's certainly got a lot higher as the premiums have gone higher, as the implied volatility has gotten higher. So it's definitely something to watch.
Absolutely.
And you don't do options, do you, Gareth? I forget if you do.
I don't do a lot of options, and if I do, I buy 2 years out. Because, and I'll be honest with you guys, like, you know, I dabbled. I don't think there's an investor or trader that hasn't dabbled in options because it looks like easy money. Well, I definitely lost more than I won. And so I learned my lesson the hard way is, you know, and always remember the institutions sell 95% of all options to the public. Yeah. They're not selling it because they're going to lose money. So in general, we're all going to lose money. It's just the only way I have an advantage is if I give myself so much time on a macro call, like let's say a top on the S&P, where that if it doesn't happen for a year, I'm okay. But at some point we'll get that 10% correction in the market and I can make money on those options.
Well, given we are on the... No, go on.
No, go ahead. Oh, you.
No, I just thought it was a good way to sort of segue into, you know, given that this is the high conviction podcast, we often like to ask is, you know, what is your sort of highest conviction trade or idea that you have at the moment?
Wow. That's a great question. All right. So I'm going to throw one out to you. They report earnings today. I'll do a couple because it's always tricky.
Yeah, absolutely.
As we always know. So one of the ones that I can't get over is this stock here. And I am short going into earnings today. So maybe I get burned. There's always that chance. I've gotten burned before, but this is the chart of Carvana. Now, Carvana was borderline bankrupt about, what was this, back in 2023. I mean, it was trading at $3. They have like 16 billion in debt. Yet somehow this chart has gone parabolic while Ford got crushed on earnings. And I understand Ford makes cars and these guys just resell them there. But at the same time, I have anecdotal evidence. You know, I have people in the office here with me. They've gone into the car dealerships and there's like no one there. And even the car dealer, the salesman, they're like, man, it has really slowed down. And so for me, I'm like, okay, wait. So maybe is everyone just going to buy from Carvana now? Maybe that's the new thing is you just buy it online and it gets delivered to you. But I'm going to go on the side of saying, I think that this is overdone at these levels, trading at a forward PE of like 150 versus some of these other ones. So that would be one of them.
Those are AI numbers, man. Those are AI numbers. Those are AI numbers.
I literally say that. I'm like, if you took away the CVNA symbol and you put NVIDIA, I would believe this chart. I'd be like, okay, I understand. I get it. But like, really? Used car dealership kind of thing? It's a little hard to get my mind around, but who knows? Maybe they'll report monster numbers today and I'll be wrong. But the other thing too is I will just say that the S&P 500 again, this is one that I thought would roll over for a while. I still think it's coming at some point. But there's too many macro signals that are just too concerning to me, whether it's global issues, whether it's domestic issues, slowdown in economies, different signals. We talked about copper earlier on and nickel and these other signs, oil, for instance. Something is coming here. And like we talked about, it's 3 to 6 months after the uninversion. So that's December through February. Maybe we start to see that economic data. But I think that you have a scenario here where the biggest risk to the US market is itself, meaning that it has been viewed now for years as the only place to be for even global money, because China, we know China has been a mess,
Yep.
and it's drawn in so much liquidity that because people think it can't lose. You can't lose if you invest in the US. And that is its biggest concern to me. That's the biggest problem here, is that we know, I mean, I traded through 08, 09. I mean, that was holy cow. That was nuts. And even in my first few years were the .com bubble. There is something coming, and it usually comes when they make everyone believe that it can't happen.
We need some dramatic music. We need some dramatic music for that. Yeah, like so. Yeah, that was good. It's like go back to the gamification. We need like one of those things for the show.
Yes,
here.
Yes. Now, having said that, by the way, just to be clear, there's always opportunities on the long side. And I do want to be clear. It's like, generally a lot of my positioning right now is on the shorter side. I do have some positioning on the longer side. Most of them are in the kind of the Russell 2000-ish, playing catch up maybe in this last run. Zoom was a big call of mine when it was in the 60s, $50 to $60 range, because it was just trading at such an attractive valuation. So there's always opportunities out there. You just have to be patient, and also just sometimes being in cash is not a bad thing either. It lets you be ready for the next big trade versus being like, oh crap, I don't have any cash to deploy because I'm spent already.
And that's you're long the Russell too?
So I'm not long the Russell specifically, but I'm long stocks that are in the Russell.
Okay, gotcha.
Yeah, definitely.
Yeah,
and I think just to touch on the Russell here too, is it does make sense. I mean, the Russell's the only thing that really hasn't made a new all-time high. I don't necessarily know if it will make a new all-time high, but this type of sideways chop is usually pretty bullish here, where it's just waiting for it to break out, and then you have a gap fill here. But I really think at least before the S&P really rolls over, you probably at least touch the high to kind of get that last push of bullishness in the market. And then once that happens, then maybe you start to see the fade. And by the way, maybe Trump's bullish for the small caps, right? Maybe less regulation is good for the smaller stocks too.
I don't know if anything's bullish for small caps, given how much they've underperformed. Yeah. But maybe just time is bullish.
Lower interest rates, at least one.
Lower interest rates.
Lower interest rates.
Yeah,
exactly.
Won't fix the fundamentals. Fix the financing, but maybe that's it.
Right, exactly. Gareth, for those who want to track you, where can they find you?
Just come to Verified Investing. That's the best place. So much free, insightful data there, folks. We put up the earnings calendars, the economic calendars. There's lots of chart analysis. Really trying to make Verified Investing into kind of a place that ignores. There's so much hype and narrative spun left and right, and we know this from social media. Michael, I mean, we all know this, right? It's ridiculous. I kind of want to make Verified Investing, and it is becoming a place where people just get data. It's straight up data. That's what it is. It tells you the most probable outcome, and that's what it is. And then otherwise, you can find me on X. You can find me on YouTube, just like you gentlemen. It's wonderful. And you guys, seriously, this has been honestly a fantastic discussion. I thank you guys for that.
And I appreciate we're tating into the election. As I'm sorry, I put the thing really quickly. We're not tating into the election, but thanks, David the man, for teasing me on that.
It's a new word. It's going to be the new word that Trump uses. Trust me.
Yeah.
Thank you, buddy. Thank you, Gareth. And of course, thank you. Make sure you check out, by the way, our Substack, GraniteShares.substack.com. Sign up on YouTube, youtube.com/@GraniteShares, and we will see